Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of what's an eggshell audit, a reverse eggshell audit, and how it could lead to criminal tax investigations and how you protect yourself. Let's start with the basics, an IRS audit, right? You do a little Google search online, you're under the impression that an IRS audit is equivalent to lining up in front of the firing squad. Some of these practitioners want to make it seem like you need 50 attorneys to walk with you into an audit. It's normally nothing like that, right? The IRS has a job. Their job is to make sure taxes are handled properly. For whatever reason, your number popped up. The IRS may not think that you did your taxes correctly, so they audit you, right? An audit could be a correspondence audit where you just get a notice in the mail. It could be an in-person audit where you go down to the IRS. It could be a business audit where they will normally show up at your place of business, and scheduled normally. And so it's not normally that bad. Another thing to keep in mind is just because you're being audited doesn't mean you're going to owe any money. Many times, someone is under audit, and it turns out to be a big waste of time, just a time suck for everybody, because by the time the agent's done with their analysis, you don't owe any money, or in fact, maybe you're due some money back. Those are always fun. And so when it comes to audits, though, there are two audits that you have to be careful of. There's the eggshell audit and the reverse eggshell audit. They're very common in the realm of international tax, so why don't we go through the basics? With an eggshell audit, it's the idea that you're walking on eggshells. Why? Because you have information that you don't want the IRS to know. Let's go through a common example. Michelle has some foreign accounts. She's a consultant. She has accounts with different countries so that she can set up local currency. It's just easier to do business. She formed a business a few years ago. It turns out she made some rather big mistakes with taking deductions and how she reported some of the income, and so now she's under audit. Now, the audit itself doesn't mention anything about foreign accounts. And so Michelle doesn't, she started doing her research and realized she hadn't done the FBAR and FATCA and all these other issues. So what does she do? Now, you can't make any intentional omissions or misrepresentations if the agent straight out said, "Hey, Michelle, do you have any foreign accounts?" And Michelle said, "No," but she does. That's a problem. But you're not also required to do the IRS agent's job for them. Right? So they ask you questions, you have to answer them, truthfully and accurately. That does not mean you have to volunteer information that is not directly related to the question just because maybe it's something that you didn't do properly in the past. So it's a dance, right? You're dancing, you're answering the questions truthfully and dancing around, not making any intentional omissions or misrepresentations so you don't get yourself into some bigger trouble. A more common issue taxpayers have to deal with, in which can be more serious, is the reverse eggshell audit. And so, unfortunately, in this situation, you're kind of the sitting duck. Here, the IRS has the information about you. They haven't told you that they have it. And so, let me give you another example. Let's just continue with Michelle. These banks reported Michelle to the IRS as is common under FATCA, Foreign Account Tax Compliance Act. It doesn't mean anything negative. It just means Michelle had sufficient funds required the foreign bank to report. The foreign bank reports. Michelle did not identify on her tax return that she had these foreign accounts. So now that Michelle is under audit, and they ask her, "Hey, do you have any foreign accounts?" Now, the foreign account issue wasn't part of the IDR, which is the information document request. The IDR referred to some of the income that was understated and deductions that were overstated or possibly embellished. And so Michelle says no. She doesn't have any foreign accounts. The problem is the IRS knows for sure that she has the accounts. Why? The foreign banks are already reported. This is a problem because this is considered an intentional omission, which is a form of fraud, right? So now what happens is the agent stops the audit or slows it down, brings it to a stop within a few minutes, and then Michelle doesn't hear back again from the agent. She might think she got away with it. Maybe she thinks the audit is done, but instead of getting a closing letter or notice of examination changes, Michelle gets a visit from two special agents who want to investigate her on issues involving the foreign accounts. This can be a problem. If Michelle is met by the two special agents, they normally work in twos, she shouldn't speak directly to the agents. Always be respectful. Let them know that you have an attorney, and if you don't have one, go out and get the attorney at that time. Just because they meet you and they make you nervous and uncomfortable, that's what they're trying to do. They're trying to find you when you're not ready. Doesn't mean you have to talk to them outside of counsel. We have lots of information available on our main website, goldinglawyers.com. If you think that you possibly want to get into compliance and haven't done so yet to avoid this type of outcome, there's various offshore tax and disclosure amnesty programs, voluntary disclosure. If you can't certify under penalty of perjury that you're non-willful, streamlined foreign, streamlined domestic, delinquency and reasonable cause. Like I said, we have lots of free information available on our main website, goldinglawyers.com. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.